All right, Dave Knight here, Knight Capital Management. Thanks for being here. We're looking at the SSM trading strategy, or the Sheathed Sword Method, our Sun Tzu offensive trading strategy. Basically, keeping that sword sheathed more than we actually pull it out and use it. Now, the bond auctions that we're paying attention to once again are the 3, the 10, the 2, 3, 5, 7, 10, and the 30-year bond. So the note auctions are the 2, 3, 5, 7, and 10-year, and then we have a bond auction, the 30-year bond. And the way they divide out the bond auctions on any given month, now we're going to start back in August and going through August and then September and October and November, and consistently keep on looking at each day as it moves forward as well, so that you can get a lot of information about this trading strategy and also help you as well. This will help you with the trading strategy, but also help you in the live trading room, or SSM trading room that we have, our live SSM trading room that we've opened up basically no more than 6 times a month. And as we've noted here before, the bar that's the most important bar on this particular trading strategy is the 1250 to 105. Now, on August 10th, now the most important thing that you need to be aware of, right, is what is going on at Forex Factory on that particular, and you should always have, this will obviously always be open, but you need to know exactly what's going on. What's kind of cool about when you're back testing and you're looking at it, you can actually open up Forex Factory like I'm doing. You can go to this week's calendar. Now you can go back in time, right? So you go back through August. We want to look at August 2010, and the actual day we want to look at is the 10th of August. And what we're looking for, right there, FOMC statement, federal funds rate coming in here. And what's the role when we see that coming into the particular trading day? If we see this on our day, we don't want to trade in front of it, right? So the federal funds statement is coming out on this Tuesday, August 10th. Therefore, we don't want to take this trading day. Now, I want to show this trading day because I want to show you after well, this is actual. Normally, it comes out at 2:15, not 1:15. This is adjusted down to daylight savings time and so forth. So anyways, let's make a long story short. This should say, normally says 2:15 when you're looking at it. So now that we know here on August 10th, this is one of the days that the FOMC is meeting, and we are not going to trade this day. This is a no trading day. So let's go ahead and move forward, and let's just take a look and see what happens here. All right, let's stop. Here is your, and let's blow up this chart right here so you can take a look at it a little bit better. So here is the 105. See, that actually went pretty fast. We'll slow it down on some of the other videos that we're looking at, really looking to get a trade. So you see that the one area right here, this is the bar you're looking at. This is your 1250 to 105 bar. So in actuality, you're looking to place an order above here. Let me change the color scheme on this so you can see this. I like to look on the white chart. I like to have it as blue, so it's easier to see a blue line obviously going across there. And let's actually change the arrow while we're at here too. Let's use this as our default. So you see that this would be our normal entry point, and we'd be looking at the open here plus 1 tick. So our normal trade here, and look over here, well, you can't, let me just do it this way. Now watch my arrow, I'm over here, right? Here's your open, 128.08. So our entry point, if the FOMC statement wasn't inactive and in effect, would be looking at going in here at 128.09. Let me actually change that color scheme as well. Now we use the orange for our TCB trading strategy, but when I'm playing around with this, I like to see it in blue. It's easier to see all the numbers and so forth. So this is what we know, right? This is what we know, and we actually need to see where is, and we can see we had enough room for profit on the upper average daily range up here at 24. So the 09, and we're looking for 8 ticks here, and our daily ADR is at 30, so we're at our minimum, looking for 8 ticks and a 6 tick stop loss. But with this being said, this is a no trading day because of the FOMC. So let's just go ahead and fast forward and see what happens during the rest of this trading session. So you see we definitely would have been entered. We'd enter into trade there. Now you see it shot up there, right? But let's go back in time here. I want to actually go back. Now, in actuality, this is the time period. Let's blow this up here because this is the time period that we're looking at right now. And maybe it'll be easier to see when I blow up the 15-minute chart and actuality in this one. There's my word for the day, actuality, right? So let's actually decrease this particular area so that you can see this. This is the chart that we actually use to trade off of, right? So we're looking at, this was our entry point right now. We're at 128.09, right? That's where we're looking at getting long. That's 1 tick higher than this bar here, and you can see that you got filled roughly in this area right there. Now, one of the things that you need to keep in mind of is that you got, okay, so we got 09, 03. So 03 would be our stop, and our target would be 9 and 6, 8 was that the 17? So we're looking at 17 for our initial target, which we have enough room, and 3 is our stop. But this is the FOMC trading day. Now, it's okay, well, it's never okay to trade this day, but let's just go ahead and move a little bit. We're actually was going a little bit too fast there. So there's time just flying by here. I'm going to slow this down just a little bit so you can actually see. Now these are 1 minute bars going. Each time this is a 1 minute area, and then each bar here is forming a 15-minute chart. So now we're at 2, 11, 12, 13, 14, 15. But we're going to back up there. Hold on. See, it went down and then up. I want to show this a little bit. That's barely. Look, it took us right out at the 03, 128.03, and then ran right back up here and hit all the other targets within a minute. So, I mean, this, in actuality, if we were looking at, let me just blow this up a little bit. We would have taken a loss, right? You would have taken a 6 tick loss per contract, or if you think of 31 1/4 times 6 is $187.50 loss per contract here. And this is why it's so dangerous to trade in front of the FOMC statement. And that's why this strategy itself, the SSM, if the FOMC meeting is in front of it, we don't want to trade in front of that particular, even though this one obviously reached its target right here. It ran us out of the trade this way. And if you take and you go back to instant replay and see this, you can see it ran you out of the trade here before it went up and then reached the upper targets. So that is the danger of this particular trading strategy, and I can't really do anything about that. Trying to get in live mode, and let me pause. Alright, so we're looking at our first trading session, and what did we learn about today? And let me change this around. I need to change the default here too. This is all set up for a TCB trading strategy. This is our well, obviously the one that we are enjoying, and this is our, here we go again. Alright, so what do we learn about today? FOMC statement, right? FOMC statement. You see that? It's no trading. So it's a no trading day. And what happened here? You saved yourself from what? $187.50 per contract loss, right? Because it ran there first. So this wraps up this particular trading day here, being August 10th, 2010. Now, August 10th, by the way, this was a 3-year note auction, and the 11th of August was the 10-year note, and the 12th of August is the 30-year bond. That's how it breaks down. The way it goes is the 3, 10, 30. It comes out consecutively on those days, and then you have your 2, 5, 7 that comes out at the end of the, and normally what happens on a normal month is the second trading week of the month, the 3, 10, 30 comes out, and the fourth trading week normally on a given month is the 2, the 5, and the 7 year. That's usually how they break out the auctions. And so it's 6 trading days are possible. And knowing ahead of time, you can plan accordingly, right? So you can look at Forex Factory actually a week or a month ahead of time, and you can actually come back here and say, okay, what days are I'm actually going to be trading this strategy, right? So if we can actually say, whoops, not print current view. We go back here to the beginning here. Look at this week's calendar, right? Then we want to go back to what the time periods that we're looking at, August. And then this is the week of our trading week, so we can actually click here and look at our trading week, right? So we can see on the 10th we have the FOMC statement. Wednesday, well, this is obviously wrong times here. This should say 10:30 a.m. Everything's been adjusted back because of the daylight savings time. This normally comes out at 10:30, so now that we know that. And anyway, so now we're looking at everything's adjusted an hour down here because of daylight savings. But that's okay. We can continue to work with this and work with it and make sure that everything is working fine. But with that being said, you can see that each one of these particular trading weeks you can look at and you can plan accordingly. So knowing that we have the 10th, the 11th, and the 12th that we're looking at. Now 11, nothing's in the way. Federal budget balance, it's an orange report. That's okay. We can trade through that. And nothing's in the way on Thursday. So the 10 and the 30-year note, there's nothing that we need to worry about, correct? So let's go ahead and move forward on the next video looking at our next trade coming on August 11th, Wednesday, August 11th on the 10-year note.